Hello, my name is Blanca Sibio, and I'm reporting to you live from San Antonio. Today, I will be discussing and reviewing the latest news on the Chinese stock market. For about a month now, the Chinese stock market has had a rapid decline of over 30% and almost to the point of complete crash. We will be taking a look at how the major decreases in the stock market may not only be hurting Chinese businessmen, but also businessmen around the world. We will also be analyzing how the people in China have coped with the problem, along with their methods on addressing the issue. However they decide to reestablish themselves and come back from this fall is important to everyone around the world, seeing as how there's investors not only in China, but in other countries as well. Besides the fact that this can impact the U.S. negatively through Chinese investors seeking reestablishment through stable U.S. companies, which can then directly affect and unravel bad events, there are foreign companies directly relying on the Chinese stock market and that are invested there, like Burberry. Just a couple of months ago, Chinese stock market was on a fast track to becoming the leading competitor with all other stock markets. It was also the largest stock market in the Asian area. Many citizens in China with no business training at all have invested time and money into these stocks because of its great success in the past, but now are at a loss and do not know what to do with its recent decline. The problem all started when these individuals rapidly made investments exceeding the profits of the companies they were investing in, causing them to face margin calls. When this problem started to surface, many realized they had to start selling off their shares in order to not hit rock bottom when the stock market was to decline. The government had to get involved and make executive decisions in order to help with this problem. The Chinese media has done a great job at keeping the people informed about what's going on. Recently, independent media outlets have begun to emerge in order to move away from being state-owned, which causes strict government regulations. Despite the fact that government has always closely monitored all media and has been able to implement the rules, the media is overcoming this and is starting to become more commercial and competitive, decreasing the government's role. However, that doesn't mean they didn't have any play in what happened with the stock market. There are still state-run media outlets influenced by the government. They are what may have caused this to all happen in the first place. Since a large percentage of the stock markets are individually owned rather than institutionally, the government had no problem convincing individuals through media to invest more and more and more into these stocks. When things started to get out of hand, most investors anticipated what was going to come, and when instability was evident, the investors grew scared of the crash. This trended in them pulling out of the stock market, which caused more problems. After it was clearly apparent that the stock market was crashing, the government stepped in. They implemented a 6-month ban on who could sell their stocks and a hold on trading stocks. With these regulations, the stock market has been able to gain a little bit more stability. I came up with 3 research questions that helped guide my search for answers when investigating the stock market in China. Number 1. What effects does this stock market crash have on the future for China and for other countries? Number 2. How did China get to this point of major declination? Number 3. Has the government's involvement helped or hurt this issue? In order to fully understand all the effects and to know accurately what is happening in China with the stock market, I found sources from 2 different magazines from different countries. I will focus on these main sources, one from China and how they portray the problem through their media versus the United States portraying the same problem. When reading articles published in China, most seem to focus on specific companies and the status in which they stand, explaining to us how it's affected them or helped them. For example, in China Daily, they published an article about how the freeze the government made affected the 3 companies with the largest number of IPOs. Here is a quote from the article. China's sudden halt to a frenzy of initial public offerings came at just the wrong time for underwriters Everbright Securities Company, Jiu'e Jian'an Securities Company, and China Merchants Security Company, explaining that these 2 companies were affected greatly when the freeze was implemented. However, in the United States, we seem to focus on why China is where they are and how them getting there has affected us. In the New York Times, there was an article about how the volatile stock market in China had to do with us. Here's a quote addressing what this might mean for the U.S. Many U.S. and European companies do business in China, and a weaker Chinese economy could result in lower sales and profits for them, explaining how, if this continues, our profits will go down, affecting us negatively, therefore showing anger and hopes of China fixing their problem. The main differences seen between these 2 stories is that here in the United States, we are very self-centered. Most articles or news stories are connected and concerned about how whatever is going on in China might be affecting us. We're constantly reassuring ourselves that this is not by our means our problem. It's China's problem for getting here, and we have no concern for the companies being affected at all. Only concern about our own companies and our own status economically. Through Chinese media, it is apparent that they are viewing this from all angles. They highlight companies that are being affected directly and the effects the decisions the government is making. I think it is very characteristic of the United States to always be concerned about ourselves. Instead of getting inside the loop and getting to talk to people there and people invested in the stock market, instead we are staying on our side and only viewing how their problems may affect us negatively in the future. Never anything positive. After all my research, it is very clear that the U.S. will not indeed be affected at all, especially with the Chinese government's efforts to continue aiding them and helping them to regrow their stock market. In conclusion, I think that the media coverage on this event is biased based on where you are at, just like any other media coverage anywhere else. Like talked about in class, Al Jazeera will only ever show negatively about the U.S. and what we're doing over there when we only show negative things about the Middle East. We are all biased to what we explain and what we put out there. So the U.S. is only ever concerned with themselves and reporting from our point of view when we should be getting inside China and seeing people over there and how we can help. And the Chinese, of course, is only showing their business owners and how it's affecting their businesses. Not really concerned about what it might do to the U.S. in the future, of course, because they live in China. Thank you for listening to my report.